Wow. It's day 2 already. Wow. Today is the second day of our class. So thank you for joining this class. Please pay attention to this video. In case you miss the online class, we are also making provision for you to watch it at your own pace. In case you miss the online training, that is the one everybody join on Zoom. This class is also designed to be recorded or to be summarized so that you can also benefit from it. I will try my possible best to do the video so that it will be shorter, so that you can also benefit. The video will not be too boring. That is why I'm making the video to be shorter. So what are we looking up today to get in our class today? What we are going to discuss is about psychology of trading. Then number 2 is how to be successful in trading. There are some tips I will give you today that will make you to be successful while trading. Then we're also going to discuss about technical analysis and fundamental analysis. Technical analysis and fundamental analysis. So without wasting much of our time, let's kickstart. Let's talk about psychology of trading. I know some of us are familiar with that word psychology of trading. Just that word psychology alone will show you that that is people's behavior, the way people behave in the market. That is what it means by psychology of trading. So it is emotional component of an investor's decision making. It is emotional component of an investor's decision making. That is psychology of trading. And this psychology of trading is being influenced by 2 major things. Number 1 is fear. Fear can make or cause an investor to make wrong decision. Then another thing, which is number 2, is greed. Greed can also make an investor to make wrong decision. So the component of investors' behavior when it comes to making decision, that is what we call psychology of trading. So the way you behave, that is psychology of trading. That is why I don't recommend demo accounts. If you are actually using demo to trade, that psychology will not be there. You just be doing anyhow because you know, even though you lose money, it's not really your money. It's just demo. That is the way it is being wired. But if you invest as little as $2, as little as $10 there, already you know that if you make any mistake, you are going to lose that money. So automatically that psychology becomes active because you know your money is at stake. That is why I recommend for you to start with live trading, no demo account. No. So the way people behave in trading, the decision making you do, it is usually backed by, influenced by greed or fear. That is the psychology of trading. A psychology can cause you to make wrong decision, can also make you to make a right decision. So it is important that you control the way you behave or the way you act. There's actually some things that will help you, or some tips I will give you that will help you to think alright when making decision. And there is also a reason why making decision is very, very difficult in trading. Why your psychology is affected is that nobody gives you rule in crypto. In trading, nobody cares whatever you do. So you are the one responsible for your action, for your decision, and not the rest. You know, conventionally, in normal sector, let's say if you invest your money in the bank, you know that the bank is there to safeguard your money, to care for your money, to make that decision for you. That is why people always want to invest their money or give their money to someone else, because they don't want to have that psychology. They don't want to think. They don't want to take the responsibility. But in crypto, it's different. You don't give anybody your money to trade for you. You will be the one responsible for it. So since you are not conversant with making such decisions on your own, it is hard to start it now. So there is something that will help you. You need to set a strategy or set rules for yourself. That is number 1 thing that will help you. You need to set rules for yourself. Set a strategy and stick to it. You can decide that I will be doing DCA, dollar cost averaging. That is buying small, small. That is also one strategy that will help you doing DCA. Very, very important. But that is one way to make good profit in crypto space, is to do DCA. So you need to set rules. Sit down properly, think, calculate your risk, set rules for yourself. That will help you to make the right decision, so that your psychology will not be affected. Making wrong decision will be minimal. When making decisions, you will make it the right way. Like I said, you need to set rules. Number two, you need to set strategies and stick to it. Another thing is sticking to your rules and your strategy. Obeying them is very, very difficult, but it is important that you obey those rules that you set when you are thinking straight. Those strategies you set when you are thinking straight, it is important to obey them, because if you don't obey them, you might lose your hard-earned money. But does it mean that if you set a strategy and a rule, it will start falling in place, going the right way at the beginning? No, it might go the wrong way at the initial time, but if you stick to it, as time passes by, you will master it and it will start going on your favor. That is it. It is difficult to start, but it's doable. It's something that you can actually do. So that is one. Then the second thing is that you need to learn how to take profit. It is important to learn how to take profit. Some people today do not take any profit. Some people will make money and also keep that money there, waiting for it to go to heaven. I remember a trade that I entered a few weeks ago. That trade, I entered it, I made over 60% profit. Just little money. I made over 60% profit. I actually wanted it to go to 200 and something percent. But because I know the market will eventually go there. But what happened is that there was a fundamental that struck the market. The market have to reverse. So imagine making 60%, but at the end, I ended up taking around 30 something percent. You see that my psychology, because of greed level, I didn't take the profit when I saw it at 67%. So it's important you set rules and stick to it. Imagine that I set rules for myself that even though it's 20% that I need on a daily basis, if I make it, I walk away. That would be nice. That will keep you safe from every other thing. So it's important to set rules and stick to it, set strategy and stick to it, and also learn how to take profit. You don't need to be a crypto trader, you need to be a profit taker. Change your mindset from being a trader to a profit taker. You take profit, you are there to take profit. That is what you are born to do. It's not to be trading every time, any day. No, it's to take profit. You trade, you make profit, you walk away. So learn how to take profit. It's very, very important you learn how to take profit. Then another thing is that you need to trade the trend. You need to trade the trend. That's another thing that will help you. You need to trade the trend according to the trend. Where is the market going? Is it going up? Is it coming down? You need to trade according to the trend. You don't need to be trading opposite the trend. If the market is going up, you'll be looking for opportunities to long the market. If the market is going down, look for opportunities to short the market. That is another thing that will help you so that you'll be successful in your trading. That will also guide your decision making. Then you also need to trade like robots. You need to detach emotions away. Certain rules, certain strategies will help you to detach emotions away. You also need to embrace your profits or calculate your profit and loss ratio before you enter any trade. You need to sit down, calculate it. If it goes on my favor, look at how much I will be making. If it goes against me, look at how much I will be losing. You need to calculate your risk or your profit and loss ratio. So it's very, very important you do that. Then when you win, you walk away. When you lose, you walk away. You also need to avoid revenge trading. It's very, very important you avoid revenge trading. So many people today has burned their hand because of revenge trading. They just want to revenge. They want to make back that money. Maybe because they enter trade, they lose it, they want to make it back. Just quick. So you need to avoid revenge trading. When you make money, you walk away. You just close for that day. If it's 2 times you want to trade in a day, you make it, you go away. Don't enter any trade again. If you know you see opportunity, leave it. Discipline yourself. The next day you look for opportunities and enter the market. That is how you trade if you want to be successful in trading. Then another thing that will help you is that you don't need to rush trades. Sometimes people, if you sign up for Signal, sometimes they will give you a call maybe you saw the call very late, you see that the market has gone up, the next thing that will come to your mind is just enter anywhere, so that you get to the take profit. It might be that you get to that take profit, the first take profit, and start reversing. And when it is reversed a little bit, you're already on loss. While other people entered at the right place, at the right time. So it's very, very important you avoid rushing trades. It is very, very important. Then, sometimes the best trade is automatically not trading at all. Sometimes, let me repeat myself, sometimes it's very, very important that you avoid trading. It is good. If you see that the market is not good, the best thing to do, the best trade that time is no trading. Another thing that will help you to make the right decision is when you are not in a good state of mind, it's better you avoid trading. Let's assume you are having issues with someone else, maybe your family member or so. It's better you avoid trading. If you are too excited, it's also important that you avoid trading because you are not in a good state of mind. You only need to trade when you are in a good state of mind. It's also important that you avoid borrowing to trade. If you borrow to trade, you will be under pressure. You will not be in a good state of mind. Or you collect money from someone to trade for the person, you will not be in a good state of mind. It's better you use your money that you can afford to lose. It will help you to be in a good state of mind. It's also important that you don't use your hard strength to trade. That will also make you not to be in a good state of mind. So these are some tips that will help you to be sound when trading, that will help your psychology to be sound. So that is the first thing we are discussing for today. Then the second thing that we have for today is how to be successful in trading. How can you be successful while trading? I will also share other tips that will help you to be successful in trading. If you want to start your crypto trading, it is important you only start with top 20 cryptos. Top 20 cryptos, which includes Bitcoin, Ethereum, BNB, Solana, ADA, Shiba, all those top 20 cryptos. Just start with them. Don't trade cryptos that are not among the top 20 cryptos. That will help you. I'm just giving you a tip that will help you to be successful in trading. The reason why you need to trade top 20 cryptos is those cryptos will not be falling like a palm tree. If if a palm tree wants to fall, just fall, boom. They will be falling gradually. They will not just dump. So it's very, very important you trade only top 20 cryptos. This is my recommendation. Remember that I'm not giving you a financial advice. This is just for educational purpose. Then you also need to look at previous high of those coins. It's very, very important you look at the previous lows and the previous highs of those coins. Then you enter on their previous low and also sell at the previous high, which is the support and resistance level. You will learn more on that on our advanced class. Then you also need to look at events and news surrounding a particular coin that you are about trading. That will also help you to become successful in trading. When you know that there are some positive news coming about a particular project or a coin, you can long it or short it. If it's a positive news, you can long the market, you can trade it. If it's a negative news, you can do well to short it. So it's also important you look at it. Then you also need to join a community of traders. It's important you join a community of traders who have the same vision with you. Not community of traders that doesn't have any vision at all. You need to join community of traders who have the same vision just like you have. That will help you. It's also important that you have a phone and a laptop. Use your laptop to do your analysis. Use your phone to enter the trade, to execute the trades. If you don't have a laptop, you can start with what you have, which is your phone. That will also help you to be successful while trading. See that these are tips. There are so many other tips that time will not allow us to mention here. Then the next thing we are going to look at now is about fundamental and technical analysis. Fundamental and technical analysis. What is fundamental analysis? It means the ground lining of a particular project. That is information surrounding a particular project, a particular coin. The ground line, the underground information surrounding a particular project. That is fundamentals of a coin. And this fundamental analysis are informations that you use to predict what a particular project or a coin will do in the future. You use fundamental analysis to predict a coin, the performance it will have in the future. That is what you use fundamental analysis for. It's all about getting those underground information about a particular coin. That is fundamentals. Then there are things to look at when doing your fundamental analysis. There are basically things that you need to look at when you are doing your fundamental analysis. Number one is that you need to look at who are the people behind that project. Who are the people behind that particular project? Who are the people involved in that project? You need to look at it. You need to ask yourself, who are the owners? Have they done any successful business before? You need to look at that very well. Very, very important. You look at people behind the project. That includes the owners of that coin and those partnering with them. Who are the people partnering with these people? Who are the people promoting this token? Do they have any record of trust? The people that owns the token, do they have any record of trust? It's also very, very important you do your fundamentals. Check out the owners of those projects. Then you also need to look at the solution that they are bringing. What solution are they bringing? What problem are they solving? It's very, very important you look at that. If they have a project they are working on, a solution they are bringing, a problem they are solving a problem, that will also affect the price of the coin in future. So you need to look at it very, very well. Then it's also important you look at their roadmap. Look at their roadmap. It's very, very important you look at their roadmap and also see if they are truly following those roadmap. All those things they plan to do, are they really following it? Are they doing it? It's very, very important you look at it. Then you also need to look at the economic and financial factors affecting that company or their coin. Are they owing? Do they have loans that they are yet to pay? Are they bankrupt? You need to look at those information. It's very, very important when doing your fundamental analysis. Remember that these informations we are giving you is not only when you are buying a coin. If people introduce you to business, these are some of the things you need to look at. If you are looking for companies to partner with, these are some of the things you look at. So it's very, very important you take notice of all these things we are discussing in our second day of our class. Then the other thing you need to look at is the market capitalization. What is the market cap? It's very, very important you look at it. If you have smaller amounts of money, let's say less than $10,000, it's important to look at, you plan on buying low cap coins. It's very, very important you look at it so that it can give you bigger money. If you go for big cap coins, you only end up making small amount of money. But if you have big capitals, big equities, it's important to look at big cap coins. So those are some of the things you need to look at. Then you also need to look at if the liquidity of that coin is locked. Does the owners have the authority to remove the liquidity from the market? Is the liquidity locked? It's very, very important to look at it. Does the owners also have the right to mint more units of those tokens? It's very, very important to look at it. If the owners have right to mint more of the tokens, it's important you leave such token, because when things go wrong, they will mint more units of those tokens. So it's very, very important you look at it very well. Then the total supply is also important. The total supply of the coin is very, very important you look at it. You also need to look at if the total supply corresponds with the market cap. If it doesn't correspond, that means there is actually something wrong on that they are not telling you. Check if the market cap corresponds with the total supply or the circulating supply. It's very, very important to look at that. You also need to check their white paper. Read their white paper. That is where you see the roadmap and all the rest. Then there are places where you can get these informations or check these informations when you want to check a particular coin. Number one place that you can check that is CoinMarketCap. You can use your CoinMarketCap to check all these information that I just mentioned about a particular coin. You can also use CoinGecko.com. You can also check new listed tokens there, check the older tokens and all the rest. Then you can also check those information on YouTube, on Twitter, on Chrome, but the safest place is CoinMarketCap and CoinGecko to check those informations. So I hope you have actually learned a lot today. We have discussed, number one, psychology of trading. That is how people behave in trading. There are two major things that affect your decision making, which is fear and greed, affects your decision making. So I've given you some of the tips that will help you to be sound when trading. I've also given you some tips on how to be successful in trading. If you want to start your trading, it's important you start with the top 20 cryptos. It's very, very important. Then we've also discussed about technical fundamental analysis. Fundamental analysis. That is the underground line or information about a particular project. I've given you things to look at when doing your fundamental analysis. Then the last but not the least is the technical analysis. What is technical analysis? And technical analysis are the information used to predict the market, what the market will happen in a particular coin over a period of time. Technical analysis is just you bring pieces of information and your technical tools to analyze, to predict what the price of a particular coin will do within the period of time. That is your technical analysis. Technical analysis focuses on what is happening now, what is happening in the next few hours, what will happen in the next one day. That is technical analysis for you. But fundamental is what will happen in the future. I hope you are getting the two, that they are different. Fundamental for future, while technical for now, within short period of time. So those tools that you need to do your technical analysis is that one, you need to learn about indicators. There are so many indicators I need to learn about. MACD, moving averages. You also need to learn about volume. You also need to learn about RSI. These are indicators that are important that you need to learn about, that will help you to do your technical analysis. You also need to learn about trending, the market trend, candlestick pattern, Fibonacci retracement, and all the rest. There are a lot. So these are some of the tools or things that you get. You will use them to analyze what will happen in shortest period of time. And that will enable you to scalp or trade, do a swing trading or scalp trading. So we've actually learned a lot today in our day 2 of our class. So if you have any question, you can do well to reach out to me, or you join our 7 days class, intensive class. After this first 7 days, we are also going to organize another 7 days class. Our work is to help you to learn more about cryptocurrency space and also make the right decision so that you can be profitable. We want you to make the right decision, informed decision. So that is why we are here. I remain your humble guy. Asha Good News is my name. So thank you for joining this our class. You can also do well to share this video with your loved ones so that they can benefit from it. So thank you and have a fantastic day.